This computer. Okay, here we go. Hey, everybody. My name's John Wires. I'm here today with Badri Malynur.
Hey, John.
Hey, everybody. And he is here with Avestor, which is a real estate syndication platform, and he created it to make real estate syndication investing much easier. So we got a really exciting episode today. This is episode 31 of the MAREI podcast. Just so I don't forget to, everyone definitely check out the membership page, MAREI.org. There's a lot of real estate investing information there. There's thousands of members. We have an active real estate group. Kim Tucker does an awesome job managing that every day. So we definitely appreciate her help. So in the syndication space, I work in syndication space myself, commercial multifamily investing in particular. And, Badri here would make a great partner on a deal just because of his platform. So we appreciate you joining us today, Badri, and giving us some insight on this platform.
Of course, John, happy to.
So let's go ahead and just give a quick introduction to yourself, a little bit about yourself, and let's go ahead and go through a presentation. I'll ask any questions. This is like if you were giving a presentation to me. So this will be nice. I think we said around whatever, 10, 15 minutes. And then you said you'll give us a preview of the platform itself. So this should definitely be interesting. People like to see some stuff on the screen versus, talker sometimes. So
excellent. Yeah. Happy to do that. So my name is Badri Malynur, and I'll have my contact information at the end of this presentation. Have exposure to a wide range of investments. I'm an angel investor. I invest in venture funds, cryptocurrency, commodities. But today, we'll focus on real estate investment. We have a platform which we believe dramatically simplifies the process of real estate investments. And hopefully you'll agree with that after you see what we have to present for you. I'm going to spend just a few seconds on the slide. This investment is not suitable for everyone. We are not giving legal advice. You should be an accredited investor. Private placements can involve a high degree of risk. Please consult your advisor before investing in any real estate investment for that matter. So what we are, John, is we are a real estate investment platform that allows you to build custom real estate portfolios, okay? We don't have, if you think of a salad bar, we don't have a small salad, large salad, medium salad, where you get a slice of everything which is already made. Mm-hmm. You get to pick and choose. You want some lettuce, you want some tomatoes, you want some jalapenos, whatever you put in your salad. So we allow you to build custom real estate portfolios which are specific to your needs, and they span a wide range of property types and a wide range of asset classes, self-storage and all that, multifamily, we'll talk about that. And you can get a combination of passive income and capital appreciation, okay? That's kind of what we do. The key word is custom, it's customized for you.
And just to add real quick here, for the people that aren't super familiar with syndication, it's essentially a group of people coming together to invest money to take down a large apartment complex or something of that nature. It's essentially like a group investment. So as you go through this, this tool and platform looks like it simplifies it, because as people that are familiar know with the syndication space, that's the reason why there's general partners that run each deal, because it's a very complicated type investment, and to really understand how the business strategy and returns are going to work, you obviously need to understand the whole picture. But this platform here looks like it'll simplify it, which is
exactly
time saving.
I'll talk a little bit about the syndication, what a syndication deal is.
Okay, all right, cool. Sounds good.
Yeah. Okay. So what we are trying to do is we are helping people move from the left to the right. I'm not going to spend too much time on explaining why real estate is a good diversification asset class. By no means am I saying that you put all your money in real estate, but some slice of it is a good thing. And we can talk more about that in offline as to why real estate is good. Let's take that as a given. Now, there are various ways you can do it. You can do active investing. You can purchase a property, but then you're subject to the single market risk. And then you have to manage the property. You can do passive investing with real estate investment trusts, but the problem with that is you are subject to the volatility of the stock market. It's one size fits all. You cannot customize it. And then you can buy the syndication deals, which is what we do actually. But the problem for a general investor to invest in syndication deals is it's fine to buy one or two deals, but many deals require $25,000 to $100,000 in minimum investment. To build we are all about building a diversified portfolio. You don't want to just do one deal at a time. You can start with one deal, but think of it like a jigsaw puzzle. You should think of what the puzzle looks like at the end. And so what we help you do is we pre-screen the deals and we help you build a diversified portfolio, putting a much smaller slice in each deal, okay? So to recap, we evaluate hundreds of syndication deals and we pre-select and the partnership pre-invests in this deal. And then we build a custom portfolio, which is aligned towards a specific investor goal, okay? And then this portfolio is diversified across multiple states. Think of us like the Fidelity or Robinhood of real estate. When you log in, it's very transparent. You'll see what each deal has done and the returns on each deal. And when the deals exit, you can reinvest the money or you can withdraw the money. And all of this is packaged in a single limited partner structure. And here is the key point, John. Even if you invest in 25 deals, you're getting a single K1. That's the beauty of it. There are some tax advantages with that, and also you don't have to worry about filing 20 different K1s for 20 different deals. So we take all of that. We have spent a lot of money in building the technology and the legal infrastructure to support a single K1, okay? So to recap here, we research the deal, we pre-invest in the deal is split into small slices, and the investors come along and set the overall portfolio direction. Avestor matches the slices and builds a custom portfolio. You get a pro rata share of the earnings, and the investors can withdraw the money when the deals exit, or they can reinvest the money in new deals, yeah? So here is a sample portfolio. You can see that you're investing across the country, and you're investing in whatever time horizon you're comfortable with. You're investing in single family housing, multifamily, student housing, apartment complexes, office, retail centers. And you can invest as little as $500 in debt deals and $2,500 in syndication deals. And I'll talk about that in a little bit here right now. So this platform offers two types of things. I already told you we offer syndication deals. And as John rightly pointed out, in a syndication deal, you're getting an ownership in a commercial property. And unlike if working with the syndicator directly, you can invest as little as $2,500 per deal. And we generally take the lower risk categories: multifamily, apartment, student housing, self-storage, and retail centers. And the beauty of this platform is you can also invest as little as $500 in loan slices, which is a really attractive alternative to putting money in the bank. As you probably know, you really need almost a magnifying glass to look at the interest. Take out your magnifying glass to look at the interest you're getting in your bank account. Mm-hmm. And we invest in only loans where we have the first lien on the property and borrower has put at least 80% down. So these are typically short-term interest loans, 6 to 15 months. They offer about 8 to 12%. And the syndication deals offer between 15 to 25% IRR. So very attractive alternative to the stock market and the real estate investment, to bank accounts, yeah? So here are some of the deals we have done in the past. Just to give you an overview, Morehouse School of Medicine, student housing, some self-storage deals, some retail centers, retail meaning essential businesses. And this is a single family community built just for renting. These are just sample deals which we have done in the past. As you can see, you get a huge amount of diversification. So John, I'm going to pause and see if you have any questions, because now I'm going to give you a very short demo of Avestor.
Yeah, a few questions. First, doesn't matter how the investor comes in. For example, person versus, traditional IRA, Roth IRA, what entity?
Excellent, excellent question. Yeah, no, we accept all of the above. I mean, obviously, we don't do 401k plans. So when it has to be a self-directed IRA or a Roth IRA. And you can invest as an LLC, you can invest as an individual. And the way we typically work is we have an initial call with you. This is not a one size fits all. We understand your risk tolerance. We understand when you need your money back. You may have a kid going to college. John, I know you're too young for that, but maybe some others do. And then we build a custom portfolio. And if you approve, we proceed. That's kind of our process. So.
Okay. Yeah, for sure. And then, so you said the minimum amount. How customized are they? Do you just say you pick the area and then you pick a percentage and that's how it's built out? It doesn't have
at a high level. So the minimum amount is $25,000. But then in that you get our typical investment portfolio. And again, it's all subject to you, is we put 20% in debt, which is like bonds at a high level. And then 80% in equity, which is like stocks. And so a $25,000 portfolio can consist of 10 $500 debt deals, which is $5,000, and 8 $2,500 equity deals. So you get almost 18 investments for a $25,000 portfolio with spread across 8 different syndication deals and 10 different debt deals. Massive amounts of diversification. And you get to pick what you want. I mean, you can say, I already have enough exposure. If you're living in California, I don't want any investments in California. You can do that. Or if you want more debt, hey, I'm really looking for more cash flow. I want more money up front rather than capital appreciation. You can do that.
So you can get, it sounds like you can get, fairly customized.
Very custom. It's for you. It's specifically built for you. That's the beauty of the platform.
And then you mentioned the K1s. I assume that comes from Avestor, correct?
Correct. We have one K1. We get our K1s from the syndicators. Avestor is just a passive investor. We work with lots of crowdfunding platforms and dozens of syndicators, and we pre-select the best deals. And once we get that K1, we have built this complex infrastructure which will prorate it and generate a single K1 for you. So.
Okay. And does Avestor essentially create, do they create an entity type relationship with each investor that comes in, or is it just one entity and then it pays out to every investor? Because obviously, normally on each syndication, there'll be a new LLC. But for you guys,
it's one entity, and each investor who comes in is a partner in that LP actually. And so then you get a K1 from that deal. Okay. And one thing I should mention is the way we make money, every penny we get from the syndicator goes back to you in a pro rata fashion, of course, based on how much you invest. What we charge is 1.25% for portfolios below 100,000 and 1% annual management fee for portfolios above 100,000. Most investors we talk to feel that it's very reasonable for all the value proposition we provide. So.
No, okay, yeah, no, that's good. That was one of my questions. Just obviously, it's a partnership. If you guys are, it's similar to the syndicator. You're doing the work, you're vetting, you're helping get the right exposures.
Exactly. And we are building the custom portfolio. For that, we charge 1 to 1.25%.
And at the end of the day, you have to evaluate the overall deal, because I have some questions from investors sometimes, and they question asset management fees or acquisition fees, but a lot of that's wrapped in, and then you have to weigh the overall thing, and then you have to weigh incentives and stuff like that, because that's how humans work. You want to keep people incentivized to do the best.
Absolutely. So we just charge a flat management fee, and so all the money which comes from the deal goes directly to you. Yeah. So we don't keep any performance fee. So.
Sure.
So let me do this. Let me give a quick demo, and then we can again have some more time for questions.
Okay.
So again, my contact information will be at the end. So happy to please do reach out, and we're happy to go into a lot more detail. I'm just going to show you. This is again like what you would see when you log into a stock brokerage account. You see your account balance. You see the breakdown between commercial debt and residential debt, and you kind of see this map, which is almost like a vanity map, if you will, where you see how your debt is distributed and where all your deals are distributed. And then if you go down at the bottom, you see your liquidity graph. So where this is how you can expect to get your money back. And very quickly, I'm not going to spend too much time right now. So you can also get the detailed portfolios information on how each deal is doing. For example, this person has invested $1,000 in this debt deal. He's made $100 so far. And if you click on it, you get some information. There's a Manhattan apartment. He's getting 9.5% return. And the exit date is 2021. So that's the general idea. We try to keep it very transparent. Our users really love what we do in terms of the transparency, the liquidity, and the diversification. And that's kind of the demo. And I'm going to leave this, my contact information. Feel free to send me an email, or you can go to our website. There's a lot of information on our website. And there is my mobile number. And with that, I'll pause and see if you have any concluding questions, John.
No, perfect. Did you so that was the platform part you're going through, right?
Yeah, I did a very quick demo. I'm happy to do a more detailed demo at a future webinar.
No, this works. And just before I forget to mention too, we'll invite Badri over for a live Q&A session. But this is a prep so people can get an idea, check out the website, go through some of these basic questions that I'm going to ask here, just so obviously we don't have to go through them again. Just have a few more. What do you usually like to look for in your investments? Like, why do you choose those type investments over another? Obviously, it could be the team, the IRR, cash on cash.
Oh, I'm really glad you asked that question. We have a fairly sophisticated mathematical model which takes into account almost 40 different variables. And maybe I can go into that in a future webinar. We look at the capital stack. We look at the track record of the sponsor, how many deals they've done. We look at the location of the property. We look at how attractive the deal is. Sometimes the deal is very attractive to the sponsor, but not very attractive to the investor. Remember that we are also invested in the deal. So we are not just taking the slice. The partners are invested in the deal. And so we have a model which looks into 40 different variables, and then we assign points for each of those. Now, some deals may be very good in some points, and they may not be as good as in others. But then we invest only in deals which are well above our baseline. And remember, we have data on hundreds of deals, so we can do a very good comparison on how this deal compares to the rest of the deals.
So obviously, as a syndicator, you evaluate different properties, and you're going that next level and evaluating different syndications.
Exactly.
How many are you guys in right now that you're spreading the portfolio over? And I'm sure it varies.
Yeah, it varies. Right now, we had a lot of investors come on board. So we have about 4 or 5 equity deals. Okay. We have invested in a couple dozen about 20 equity deals before this. And then we have 400 debt deals in which we have exited 250. So there's always a wide arrangement of choices to choose from. So.
Okay, sounds good. And then you said once there's always deals that are closing, 1031ing. Is that process pretty easy and similar with Avestor once some of the cash comes out from these syndications?
Yeah, absolutely. As soon as any deals exit, we give you the prorated amount. But one thing I should mention is we don't take 1031 exchanges. So any money you put in, right now it's a little complex because it's a private fund. We don't take 1031 exchanges, but we do take IRAs though. So,
well, so since they're exiting at different times, what happens to the cash that's available? Let's say with 25% of the fund, how does that get all worked? Does it get reinvested?
Yeah, you can either remove the amount or you can reinvest. It's your choice.
So, okay, that's what I wanted. And
you have complete control over the money. It's up to you. If you want to reinvest, you can see the next available deals and say, hey, I like this deal. Why don't you reinvest in this? It's up to you. So.
Interesting. So that provides some flexibility you wouldn't get with the syndication because obviously you can't just pull the funds out of there.
Exactly.
Interesting. Last question. This is kind of I just thought of this. with investors you've been working with, what trends or what's the most popular people are looking for as far as investments? I mean, is it like multifamily specific cities? Is it self-storage? Is it old folks homes? What are you seeing?
You know, to be candid, most of our investors are busy professionals. They don't have time to look at the trends, and they don't come to us and say, I want to invest in this.
Okay.
But there
Show
are
me the money.
people
That's what
who,
they want, right?
yeah, there are people who basically do invest syndication deals directly. And what they come to Avestor is to build a diversified portfolio. And strangely enough, even syndicators, we have syndicators who invest as a passive investor. Because, I mean, obviously you need to put money in your own deal, but you don't want to put all your eggs in one basket. So if you want to build a diversified portfolio, even syndicators come to us and say, hey, build us a diversified passive portfolio, right? People do both passive investing and active investing. So.
Interesting. Okay.
But to answer your question at a high level, there is a lot of demand for multifamily. People want to move away from the volatility of the stock market. We haven't done a lot of senior living yet, but we are actively evaluating that space. And self-storage is very popular because that tends to do well in times of recession. So.
Okay, interesting. I mean, at the end of the day, it's like they're just, I want the returns and don't lose my money.
Exactly.
Obviously, preservation of wealth. Okay, awesome, Badri. Thanks. I think everyone here definitely check out his contact info. It's been up for a while. We appreciate your time. I will let you know once we schedule the live session, and I'll let all our viewers know too. And that'll be more of a in-depth Q&A. Obviously, in the meantime, check out the website, give him a call, get some understanding of where you would like to be in his platform, and then we can go from there. Is there anything else you wanted to end with at all, or?
No, not at all, John.
Okay.
I mean, I think thank you for the opportunity. Again, I encourage people to look at the website. There's a lot of information there. To recap, what we do is we take syndication deals and debt deals and then slice it into small, manageable slices to help you build diversified custom portfolios. That's kind of what we do. So.
Awesome. Yeah, I the first time I saw this presentation with another syndication group, because we're all kind of in the similar circles, I thought it was interesting. So I saw you on another networking session and asked you to do a presentation here for the MAREI group, and then we'll do one for the KC Multifamily Capital group, the live Q&A. So this is definitely interesting, and I think this will help a lot of people because, you know, passive investing, it's nice to have some management behind that. So thank you again, and we'll have you back on, and appreciate it. Hope you have a good week. Thanks, Badri.
Thank you, John.
Take it easy. Bye.
Yeah, take care.